Okay, mic check, mic check. Good morning, good morning, good morning. Should be able to now see the screen. As I orient it here. Welcome, welcome. Mr. Blue here, TradePhantoms.com. Hopefully y'all had a good last week of October and new quarter, all that good stuff. Today's Tuesday, October 8th, 2024. And I'll spend an hour here with you folks, as always, kind of go over some pre-market routine, some morning prep, set some things up potentially, and then when that bell rings, if I see a setup, hey Jackie, I will, good morning to you. What's going on, Fox? I'll potentially take the trade if it lines up. Cool. Hey, Daniel. Okay. All right, cool. So let's dive in. Rick Arrington, my man. Good morning to you, sir. Ravi, P, Ryan. Oh, Ryan Hookta's in the house. Hookta. All right, cool. Let's dive in. Joe Frank. All right, folks, I'll try to catch the questions as they kind of come in. All right, cool. So let's dive in. Yeah. You up, Mr. Blue? TradePhantoms.com, right? It's going to be more options. I would say more equities options. I'll start out with futures. But before I do that, just real quick, I want to bring your, most of y'all probably already know, but just in case, as always, what's going on, William? Yesterday was fairly quiet just in terms of news, right? I kind of filter this out for just the main kind of higher impact ones. So this is, forexfactor.com, a very basic website, kind of gives you the calendar, pretty organized here. There's a couple of websites here, but, this is, normal one here, just gets straight to the point, right? So, today, Tuesday, October 8th today, and, there's really nothing in terms of news here in the US. That's going to be such a major catalyst. All other things being equal, tomorrow we do have FOMC meeting minutes where he's talking about the past rate cut. However, the key takeaway for this week to definitely put on your radar is going to be the Thursday, October 10th. Of course, as you can see, we have a CPI, so that's a big one there. Unemployment claims too as well. In addition to that. So that's a major one there, major market mover. And then followed by Friday, we have unemployment claims and then core PPI. So these, Thursday and Friday is going to be a bit more, I would say, heavier, if you will, for some news announcement catalysts, so on and so forth. If you listen to Bloomberg or anything like that, I love listening to Bloomberg. They're kind of, they're kind of neutral. They just kind of give you the factual data. There's a website, cmbgroup.com, Fed Watch tool. They're starting to talk because we're about 30 days away from the next Fed meeting, right? So, we still have some things to go through before we go into the next Fed meeting, but this is starting to come back into the talk tracks with in the financial markets, finance. So it's a little too early to talk a little bit about this, but I'm taking a peek at this here and there. This is a website that we use based on the Fed Fund futures rate that can give us some insight on what the market is expecting, not people's opinions, but what's being traded based on Fed Fund futures. Okay, so the whole market around that as well. So this is, just something that I'm taking a peek at. And the reason why I bring it up right now is because today's Tuesday, of course, and I just mentioned that Thursday is CPI. So it's kind of good it's a good idea potentially to look at what it is pre-CPI, and then come back, Friday next week as we digest the CPI and PPI later in the week to see what changed, right? Did did the dot plot, did the needle, if you will, move, so on and so forth, right? So again, I'm not going to spend too much time on that. It's a little bit too early to go into a economics 101 class here, but just to keep it basic right now, that's something that I just wanted to at least shed some light for you folks, just to put kind of on your radar, because it's important to just kind of note, have some notations on the pre and post when you have something like CPI, which is a major news announcement regarding, of course, what the Fed may or may not want to do. Okay, so yeah, and my phantoms know we'll talk more about that, as we continue and go on and so forth. That being said, let me move on and switch over into the charts over here. So it's going to be think or swim, and I'm going to switch this over to the major four indexes. Okay, so just real quick as well, as always, might have some new folks coming in, joining the YouTube channel, all that. Welcome. We also want to start with what's called a top-down approach, multiple time frame analysis, right? Demand supply, institutional demand supply. All right, I'm not going to go through this, but I bring this up every morning, no matter if you're been with Phantoms for quite some time, all the way into maybe you're just taking a peek and seeing if this is the right fit for you. The point that I'm trying to make here is monthly, weekly, daily. We always want to start with the higher time frames, and this is just a checklist that students and members could have to help build their day, their trade plan. What's going on, Montu? All right, so I color code things orange, yellow, blue, so you'll kind of see that on my charts here and there. We have, a couple candlestick formations here, location being most important. We always discuss this in great detail. And then we have bearish candlesticks as well, okay, for supply, downtrends, et cetera, et cetera, et cetera. And then we have the, what I kind of call the liquidity map here. This is a liquidity map where I got trained out there, New York City. This is kind of my style of trade here. Get on the right side and ride. And yeah, so that being said, just bringing that to light there. And what you see right here, albeit we start with the higher time frames being monthly, weekly, daily, top-down approach. What you see right here is going to be the S&P futures on the daily time frame, upper left, NASDAQ upper right, Dow Jones low left, and then we get the Russell 2000 bottom right, which is in a snooze fest right now, being Russell. And we have, I'm just going to open up, I should say, the S&P futures. All right, I'm going to keep a long story short here. If you've been tracking the page, you can go watch some of the past recordings where we, kind of talked about impulse corrections, what kind of trend we are, still macro picture uptrend, right? And, to make a long story short here, markets are pretty quiet right now. So it's brushing off kind of everything that's going around right now. We are in October, right? But right now, we've been in the long base here. Markets are very S&P right here, talking about it. We've had all-time highs put in about, a couple weeks ago, give or take, a week or two ago. And, we're coming off those highs, but we haven't really made any advancement move up, or we haven't really made any advancement move down, correction-wise. So, we're still in this basing here. Now, of course, I just mentioned when I started out in the morning here that we do have a couple things that could be used as catalysts for a breakout, one way or the other, right? Now we are in a macro picture uptrend. However, markets, could of course have a deeper correction down. Okay, so you'll see in a moment when I go down to the smaller time frames and the darker background, you'll see a couple of levels that I have mapped out. Okay, we have these levels, that most of y'all might even have the price already because they're still valid for now because markets haven't really been moving. Okay, so we've been inside, we haven't really been moving. So, there's nothing else to say here. I'm trying to find the words, and there's no words, right? We're just basing right now. So just, stay on your toes. Daily time frame on the NASDAQ futures, I can say that almost the same thing. We've been in just, pretty much basing for the past several days. All right, now we do, or have been, I should say, coming off of this supply that we had pinned out for, quite some time, in this 20,000, 20,500 up to, 20,800. We have this daily level right in here. And, as you can see, S&Ps are at all-time highs, but the NASDAQ is not, right? So the NASDAQ has just been kind of a little bit more of a laggard versus the S&P, being tech, a bit more of a, I want to say sell-off on tech, but just, because it's been so strong for so long, it's just taking a little bit of a, I wouldn't say backseat, but on the passenger seat. I think I phrased it not too long ago. So it's just kind of in the passenger seat right now, but any moment, just always remember it could take that wheel and tech could lead the way again. The point that I'm trying to make here as well is there's a couple levels down here mapped out. right? There's a couple levels below, there's a couple levels above. Okay, so if we get deeper up here, you'll see on the darker background, we have a couple prices here, but I will mark out and have you all map out, because I think there's a gap fill up here on the QQQs that have confluence up into this level right here. So call it about 20,000 as NASDAQ futures, 20,000, about 700, give or take. That's gonna be deeper into this supply zone up here into the left. And if I just take a quick field trip really quickly, if I may, over into QQQs, we've been kind of mapping out, above and below, because it can get kind of messy here with all the lines, all the notes that we have in live trading and classes, et cetera, et cetera, et cetera. But we've been kind of, just hanging out, right? We've been kind of trying to break to the upside, trying to break out to the upside, but we cannot. Okay, we kind of put in what could be potentially a right shoulder right here. So we've been talking about this. It's on prior recording, so I'm not going to spend too much time on that. Okay, but as you can see, we're still not at all-time highs on the QQQs. And again, the reason why I wanted to bring your attention to this is because if you notice on the NASDAQ futures that I just pointed out about the 20,750 handle, give or take, that's going to be deeper up into this level, and there's what's called an unfilled gap right here on QQQs. Okay, so there's a gap from July 16th, if you were to go to the exact date where we had a closing, then we had a big gap down, okay? And then so far, okay, we have not filled that gap. So we came up here, and if I go over to the left, okay, you can see it still have some space here, or some void, if you will, where it would need to potentially fill, okay? So even if, for example, NASDAQ and QQQs did pop up, okay, just remember that that unfilled gap is parked right there. That comes in at about 469, give or take. I might be a penny or two off. I think I made it the exact price. 496, apologize. 496.34, and that's that price point right there. Okay, and I was talking about a quick, potentially a liquidity sweep potentially up here as well. Now bringing that back to futures, that's going to be up here at about 20,720. So I've already did the connection, drawing the parallel, right, to what this futures level would be priced at if and when QQQs came up and gap filled, filled that unfilled void gap, okay? And then, I'll go down to the darker background in a moment here, so you could basically see better the prices better, lower. If I just go to the NASDAQ, there's also an unfilled gap down here in addition to that as well. Okay, so it's kind of interesting here with the NASDAQ because we have an unfilled gap lower down here, and then we have an unfilled gap higher up here. And if I were to ask y'all, where are we in respect in respect to that, we're right in the middle of it, right? We're right in the middle, right? Because pre-market quote right now is right here on QQQs. So where my cursor is kind of hanging out, we're in the middle of that unfilled gap higher, unfilled gap lower. So just to add more kind of, market's been kind of grinding sideways a bit, adding where we are in the respect of the unfilled gaps, that just provides more kind of, what's this market going to do? Come on, make a move, right? Up or down. And I'm talking more of like a bigger move up or a bigger move down. That unfilled gap comes at about 471.44, give or take. So yeah, that's kind of like the lay of the land, just really quickly using NASDAQ. And again, this is QQQs as a QQQs, which is an ETF for said NASDAQ, yeah? All right, now let me go drop down over here I'm gonna go to the darker background here. All right, so for some folks that are just on the channel here, I have monthly over here on the left, I got weekly in the middle, I got daily on the right. Okay, monthly, weekly, daily, always starting that out with the higher time frames. Okay, for time's sake, I'm just gonna kind of move forward here. All right, so I'll switch this over to the S&P futures. I'm gonna have the smaller time frames here. So I'm gonna have the 60-minute time frame here, 1 hour time frame upper left, 30-minute time frame lower left, 5-minute here, 2-minute time frame here on the right. So starting from the higher time frames, dropping down to the high time frames, dropping down to the smalls. Okay, one of the first things we want to do is map out what's called our Globex highs, Globex low, which is just a fancy word for overnight high, overnight low. So right now futures are slightly higher, right? S&Ps are up, 0.37%, okay? And that's represented by here, again, 1 hour time frame. So you can see, we're up, right? We basing, we're up. This blue line represents where the highest point of Globex, which was just, a couple hours ago, which is up here, 57.70, got a Globex low. It might be tough to see, but there's a wick right there. There is a wick, okay? And that brings that Globex low 5725.75. It might be a tick or two off, so you can just check your platform to verify. All right. Now, long story short with this is, oh my God, man, this 57.38 level, which I'm almost annoyed talking about it so much because, we've been talking about this level over here, which we caught, right? This impulse basing impulse 37.38. Okay, this is, what, September 20th, where it came down and touched it for the first time, worked out. Okay, yes, great, we caught that. It's getting old now. And, there's barely been nothing below that current price. Right, I was talking about this, wick here, wick here, wick here, wick here. And long story short is we keep coming down into this 37.38 and we bounce out. Again, overnight, last night, okay, dipped right back in it again and bounced out again. Okay, now be careful with this. Here's why: because the books would say, the more times that price hits a level, the stronger that it becomes. Okay, what we have to understand about demand and supply is everything is, it absorbs. Okay, it absorbs. So the more time that this level gets tested, in fact, the lack of buyers. Okay, there's only going to be so many more times that the buyers could potentially beat out the sellers here at this 57.38 level. Okay, so the point that I'm trying to make is that we don't really have a fresh level below price. Now, continues to work out, but fool me once, fool me twice, fool me three times, several times. Okay, eventually, I'm probably, this probability wise, this level is going to give out. Okay, so if, in the event that does happen, okay, we have a couple levels down in here. So I have 57.07, there's a level right there. There's 56.80, which is a level right there. Now, again, these levels are not really high quality as well tested. Okay, so to keep a long story short here, if I look down here, I have a note here with a C on it, right? Because we kind of graded levels, kind of grading the zones, the demand supply zones. That comes in at about what, 56.06, and then I have 55.66. Okay, so 56.06 and then 55.66, and we have a C and a B there because this is going to be a bit more of what's called a higher probability level because it's prime, it's fresh, right? And if I go to the SPYs right over here, SPY, which is ETF, because that was the S&P futures, these levels are right here as well. So there's some unfilled gaps down in here, and these are going to be the levels that, in the event that this level above, okay, gets taken out because it's been tested so many times, potentially, okay, we could be going lower, okay, if this level were to give out. All right, and yeah, so there's a level right here, yes, okay, albeit, and we do have a monthly, I should say last month's VWAP on that as well, but we have, these going to be a bit more what's called impulse spacing, impulse, a bit more fresher, all right, and there goes the C, okay, to map out, connect your dots, right, connect the C's, connect the B's, okay, and that comes in at, the level on C would be 56.05 on futures, but that comes in about what, 559 on SPYs, and the B 55.66 futures, that price on SPYs is going to be what, 556. Okay, so yeah, just to connect those dots for you folks here. Now, is it going to happen today? Not sure. Hasn't happened in what, weeks? Okay, because we've been in this basing range for quite some time, as I disclosed, right on the first chart that we went to. Okay, so really this market right now, we're still in a bull market, overall uptrend. No news catalyst today, right? So, just be careful, could have an inside day, all right? Meaning that we're not really advancing higher or advancing lower, so just trade diligently regarding that, right? I'm gonna be more of a, maybe I would say more short-term scalper, okay? Not really expecting too much as some big runners, potentially just with the environment that we have today, okay? Potentially, right? All other things being equal. Okay, cool, let me keep the flow going here. So yeah, in short here, we could still utilize this 57.07, this 56.80 level, but as you notice, you might not be able to see it. Hopefully y'all can see it a little bit better. I did map out these. I have a note here as note with an asterisk labeled aggressive. So I just want to be a little careful with these levels right here. The better ones, of course, are going to be those the ones that I went on the SPYs with the C's and the B's down in here. Oops. Okay. For Globex trap short, I have these levels mapped out. Okay, here's Globex high. We have a level right here that we can pin. This is yesterday's high. All right, so, there could be some liquidity sweeping. Okay, I actually did on Friday with the team in the trade room where I have a lot more time instead of just an hour. I did have a little discussion regarding liquidity sweeping. So even if we do break the Globex high here today with this blue line right here, we come higher. Yesterday's highs right here. There could be a liquidity sweep right here, and we could be utilizing this. This is even getting better now for a Globex trap here at 58.70, which is a level on top of level right above yesterday's high. So it could potentially trap some late buyers up in here for a potential Globex short. So that comes into 58.70, and that could be something that you can lean against for a Globex trap short here today if that were to happen. Okay, and that would be above yesterday's high, which comes in about 58.08. Okay, so you can just reference that point right there. Okay, cool. So I will I'm just make a note of that real quick. Yesterday's high. I'm gonna do Nasdaq, but I'm gonna go Nasdaq a bit more quicker as well. Okay, and I'll go straight to the 1 hour time frame of Nasdaq futures here. Okay, let me map out Globex high here, pop right there with the blue line here, Globex low here, right 19,900. Okay, and I can say the same thing, right? This level on Nasdaq below, I'm on the 60, but again, you always want to reference your higher time frames, monthly, weekly, dailies, right? But yeah, this level's been tested multiple times, right? So just be careful with this, especially something like on the Nasdaq. Okay, you can see yesterday we were just basing them. Once this market kind of opened up a little bit, we kind of moved down. I did make a note to the team that this market's in kind of a negative GEX, or building up a little bit of negative GEX, which could be providing some lack of liquidity. It's a topic that is well beyond the scope of this 1 hour session. But yeah, so just be on your P's and Q's, because if this market does drop down, okay, you can potentially get this kind of spike moves down, what's called negative GEX. Okay, again, well beyond the scope of this course. Long story short here is, as you can see, these are the notes from last Friday where I was talking about this October 1 high. Okay, level on level up here. So as you can see, 2365. Okay, and 2337. Okay, again, repeat 2365. If I bring that price over to the hard right edge, so y'all can see it, this could potentially be some good, a good potential for a Globex trap short. Nasdaq futures, 20,337, 20,365. Okay, and again, that would be not only above last Friday's high. I'm sorry, not only above yesterday's high, being right here, but that would also be above last Friday, October 1 high. Okay, so again, we don't want to buy high, we want to sell high, right? So if we were to rally up into the supply, that could be a potentiality for a potential Globex trap short. Okay, and some trapping on some Globex highs. Okay, and Mr. Black, if you ever spent some time with Mr. Black, this supply demand. He talks a lot about level on level, which is good. All right, multiple supply zones packed on top of each other, which is good. Okay, demand zones lower down here. I have 19,735. Okay, you can put a pin on that, and then again, if I were to go a little bit more lower, deeper lower lows, I have these levels over here mapped out A and B. In Nasdaq futures, that comes in at about 19,325. Okay, 19,325. This is recorded, so you can always take a peek at the recording, because I know I'm moving fast. And again, just to draw the parallels really quickly before I move on to oil and gold, if I were to draw the parallels and connect the confluence areas, that B and C is going to be a lot more closer to this unfilled gap right in here on Qs. Okay, so in the event that this level gives out, okay, here we are, right? We would be at this this potential unfilled gap, and this could be a bit of a, I would say more prime, fresher level down in here on Nasdaq futures, 19,325. Okay, so as you can see, I'm kind of opening up the chart a bit here because again, in a period of consolidation, all right, don't get trapped. Okay, when it's not moving, right, markets are contracting, you get complacent, right, you start to pick off levels that are closer, and then next thing you know, once the market opens up, right, floodgates open up, and it's kind of like a dam, right, like a dam, like a dam, right, and it's holding, and then all of a sudden the dam breaks and water flows, right. So just be courteous of that. Okay, just be courteous of that. All right, don't get caught being complacent within this small range. Oil. All right, monthly, weekly, daily. Okay, oil's been very rangy on the monthly time frames for quite some time, coming off low range. As you can see, we've been talking about this. You know, oil's been in play, right? We did pop. We had this kind of level here mapped out on the dailies, okay, and it absorbed it. It absorbed it, right? We could have picked off some levels here and here, but we absorbed that. Oil did make a nice little move yesterday. We are correcting and pulling back off that, and that's fair to say because now we moved pretty fast, okay, from down here to 60s handles up into 78 handles, right? So that was a pretty fast move there, happened fairly quickly, okay? So albeit it wants to take a little bit of a break. So today's a pullback day. Onset oil, we'll come back in a bit of range here, all right? Onset oil. So yeah, that being said, I'll just drop down to the 60-minute time frame here. I'm mapping out our Globex high, which I already had mapped out here. Okay, Globex low, actually right here. Okay, and if we were to kind of have some demand zones below current price, I have these already kind of mapped out. This is aggressive. Okay, so make a note of that. 72.90. Okay, 72.90. Okay, so if that were to come down, or if we were to break Globex low, which we already did, there's a demand zone right here, but it's not the greatest high probability. It's developed overnight. The point that I'm trying to make, long story short, is 72.90 might be a better area to maybe potentially pick off a Globex trap long, bullish. And then we also have an even number here as well, 72. Okay, 72 right down in here, where we have a basing, a nice little breakout right in here. So that if that were to be revisited potentially today, you can maybe get some play off that. And Globex trap short, I would want to, there's really not much above price. Okay, there's a level right here, but I do have this level right here, which was a weekly high that comes in at about 80. What is it, 80.20, give or take? I might be a tick or two off. So there's a weekly, if I could spell right, there's a weekly high here. All right, that price potentially might want to attract to right in here. Okay, so middle time frame is going to be the weekly. I know it's kind of messy with all the lines and things like that, but I like to keep my work there so you can see how the levels work out, whether they do or whether they don't. All right, but we did pick off these levels here. All right, it's kind of freaky, but came up right 75.50, took the correction, and then we came up 76.50, took the correction, and then we eventually broke it out. So as you can see, I'm not here to try to pick out highs and lows, but because if you analyze the proper institutional order flow of demand and supply, okay, you will have higher probability of success of where these spots, okay, could be to make executions, right? Buy low, sell high, buy low, okay? And that goes in tandem with this liquidity map here, okay? It may take some time for folks to learn that, okay? But once you learn that, it's a gift, okay? It's a gift, okay? Okay, moving on. Let me just go to gold. Now, gold's going to be a pretty simple one here because it's just been in a macro bull market, right? So seasonality-wise, very strong as well. Typically for the month of September on to the end of the year. Okay, this chart is bananas with all the lines here, so I get that. But the good news is, be careful with gold right now because it's been really sleeping. Okay, gold's just kind of going back into the cave. And nobody's mining it right now, right? To use a terrible joke. But the it's been quiet right now, right? We saw, and that's fair to say because this thing has been rallying so nicely. Okay, so it's just kind of sleeping, hibernating a little bit, gold cave. Okay, but if we go lower into 26, this is going to be some good play here. We have the 20 pair moving average on the weekly here as well. So we come down to 2600, 2600, give or take, and down into, I would basically say all the way down to 25 to 26 would be a nice little area for even long-term macro play, swing trades, rotation for some longs. Okay, day trade, you can come up here and start to day trade and pick off some levels. But just be careful with that, right? Just make sure you're being very diligent. But if we do come lower down to 25 into the 26, we got some nice little demand here on the weekly time frame, in addition to daily time frame as well. That might come into a bigger play. And as you can see, this is why I color code things. So you see this blue box down in here. This blue box is going to represent that I have some daily demand zone. So as I'm daily demand zone, right? And then if I drill down and refine on the 60-minute time frame, okay, this is where we're going to be, refining, right? Getting a little more sniper, if you will, getting the zones fairly tight in the proper location for that. Okay, so you can see gold up here has been rangy. All right, I don't even have price points at these little gray boxes right here. Yes, there's demand demand, okay? But notice I don't have any prices on them or anything like that, because these could just be a little bit more aggressive, because in the event that gold does kind of take a deeper correction, we might be wanting to sift out some daily and some weekly demand, which is also lower down here, okay? So make sure you pin off these. If I just make a yellow line right here, and for you traders that are not really looking to day trade, okay, which that's fine, right? There's all types of styles of trade: long-term investing, swing trading, day trading, scalping. There's something for everybody, right? That's why so many people are attracted to the financial markets. But the point that I'm trying to make here is this is going to be a weekly demand zone down here, okay? So this could be good for some swings and even some, I would say, longer term play as well, to keep it short and sweet, right? Make sense? All right, now I got 13 minutes before market opens, regular trading hours. And so that being said, and what I want to do is go over and check the VIX and do some equities and options right now as well. Okay, and so yeah, so 25, I'll just keep it nice and even number there, 25.41. That's where we're gonna have that deeper weekly level down in there, okay? And I'm not gonna talk about it right now. We go down into refine into that level as well. But before we get down to the weekly, we have to go down to the daily first, and that would be 2600, which is gonna be right here as well. So if I just kind of make that a bright blue, that might be a bit more visible to see right in there, okay? We've got levels inside of levels in here as well, okay? And I'm not gonna waste time with selling short gold because if you did do that, you know, great, but just be careful with that macro picture, okay, up. But yeah, I'd be more of like a short-term day trader, scalper, if I'm looking to, you know, sell short, okay? Now, don't get me wrong, some of those work out, right? If you, you know, pick your levels out and get a little bit more on the extreme side, you can see some liquidity fishes right here, all right? See that little wick right there, right? Globex high, there's a Globex trap right there. There's a Globex high, swiped up, green bar, green bar, green bar, green bar, trapped some buyers, and then came right back into range, okay? And you can see Globex low, okay? Swiped a new low, trapped some sellers, came back into mid-range, okay? So if you're trading gold, be very diligent, and I would almost express to wait for sweeps, wait for liquidity sweeps, put your entry where people are getting stopped out and trapped, okay? And again, that's, you know, if you don't know about that, well, you know, come to class. We talk in detail about that. 12 minutes before opens, not the most ideal time to go into that Pandora's box. Okay, so that being said, moving on, VIX. Where are we at? So VIX, volatility index, implied volatility of SPX options 30 days out. But what you want to understand, just keeping it short and sweet, there's more to it, but VIX up, market down, VIX down, market up. So inverse correlation. We always want to map out, of course, yesterday's high, yesterday's low. So I'm on a daily time frame of VIX. All right, you can see VIX slightly down today, 3% so far. Okay, yesterday we had a spike up, right? Yesterday we had a spike up as markets took a little while, but eventually dropped down a little bit there. And not only do we map that out during, or I should say, higher time frames, we want to map this out and track this during the trading session as well. So in addition to mapping out where we are in the higher time frame picture on VIX, I always kind of reference the overnight high, which is going to be right there on said VIX. This is a small time frame, and the overnight low, which is, so far we're on VIX lows right now, which is represented by that line right there. So what do we do with this information? Well, if VIX continues to fade lower, 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 okay, that could be more bullish for the market, or, you know, markets kind of holding bids and going up, okay? And if we are doing nothing, well, okay, nothing. And then if we are spiking up, okay, that could be, if we spike up on VIX and sustain up, okay, that could be a bit more of a downward move or downward pressure in the market. As you can see yesterday, you know, as the VIX was spiking up, the markets towards the end of the day started to sell off a little bit more, okay? It makes sense, but we didn't break any structure, okay? So you still have to put everything into context, right? And we already just discussed that. So far, we have in terms of sectors, you know, right now, tech is coming out the gate a little bit more stronger. Oil is taking a bit of a hit right now as oil kind of pulled back down from the level. I do have XOM options. I don't know if anybody took some profit on those XOMs. You know, I hit target 1 on this little baby account that I usually trade with folks in here. I still have those on, okay? But yeah, we'll talk a little bit more about that too. You know, tomorrow. All right, but yeah, energy's having a little bit of a clip move down here today. Tech, XLK, a little bit more of the stronger one of the group so far today. All right, mainly that's going to be from NVIDIA and NVIDIA. I don't have enough time to talk about that right now. And yeah, just want to just want to get a pulse on the sectors over here. So if tech's a big one there. Tech's a big one. It's one of the more heavier weighted ones in the S&P 500 right now in terms of sector breakdown. So we'll see if tech holds its bid. That might just have some kind of support for the market, bids for the market. Okay. But anyways, moving on. Let me just take this one. Take the extended traded hours. All right, I want to see if tech can remain somewhat strong. Okay. Now I'm going to go sift through. I already went over some SPYs and Qs. All right, SPYs pre-market quote 570. So I'm on a daily time frame, just going very quickly. And we're gapping up, yes, but remember, folks, context, location, right? Everything's about context and location. So albeit, yes, we are gapping up. But again, if I were to just keep it simple like a 5-year-old here, and I got, red box here, green box here, okay? And we're gapping up, yes, but we're gapping up dead smack in the middle of this range that you've been in, okay? So just be extremely careful off the open on SPYs. Okay, because it is gapping up right in the middle. Same thing with NASDAQ, okay? We touched upon that briefly as well, right? So again, just because we're gapping up does not mean that this market's just gonna fly to the upside, okay? You have to put everything into perspective, okay? Which I'm hoping that I did somewhat of a decent job doing for you folks. Apple, I am short Apple, disclaimer, okay? We had a nice little bop down yesterday, okay? Not too bad. All right, yesterday's close here, slight gap up here. Again, I don't want to sound like a broken record, but this gap up here, at least on Apple, is going to be dead smack in the middle of yesterday's range. Okay, so just be careful with that. All right, Amazon, a bit more weaker. All right, Amazon did have a, I don't know if anybody, well, some of my phantoms may know this, almost what's called a island gap yesterday in Amazon. So I don't know if y'all caught Amazon yesterday. It was a nice little easy trade if you know what you're looking for. And Amazon's a bit more of the weaker one. For the past, for I would say October, okay, for October so far, okay. So I will see slight gap up, all right. But if I were to, look at, what's strong, what's weak, Amazon will be a bit more of the weaker one as opposed to others. Google as well, a bit more of a weaker one. It had a nasty day yesterday. It just cannot break this weekly supply level to the left of it. Okay, so weekly supply came up to the extreme. And, this is a weekly bar right here, right? It's only one day though, but, Amazon right now already from yesterday, just yesterday gave back everything that it did on the prior week, okay? Now, does that mean that we're going to continue to fall through down here today? Doesn't guarantee it, okay? But again, I would say voting, right? Voting, this would be a bit more of a weaker vote, okay? More bearish in the event that, markets were to come down, okay? So, because Google did not have a good day yesterday. And just in one day, yesterday being Monday, gave back everything that it did on an up week last week. So pretty interesting here, okay? Tesla, again, most FANG stocks did kind of put in a kind of nasty candle yesterday. Tesla's a bit more weaker too. Now I'm still holding on to options that we got in like way down here. Already took profit on a majority of it. I think I got a couple of runners on in my IRA, 20% of the position. Okay, it's giving back some, but I'm okay with that. All right. Well, it's not giving back. It's giving back some profit. It's still in profit, but it's giving back some profit. Now, Tesla, I don't have enough time to explain it right now, but this is going to be on the dock because it's coming out with its robo-taxi and stuff like that. Elon's kind of crazy sometimes here and there, whether you love him or hate him. I don't really care about that. Everything's business here and trading and investing. But Tesla's going to be pretty interesting. I need more time to explain. I'll talk to the group tomorrow in the live trade room when I have more time. But yeah, robotaxi has an event, yada yada yada. So Tesla's, I'm sure, gonna have some reaction off of that. AVGO, one of my favorite stocks on the planet. It's been holding relative strength wise. Okay, so yeah, AVGO. Here's the all-time highs. Okay, on it, and it's one of the big stocks, FANG, Magnificent. Well, it's not really part of the Magnificent Seven, but it's still up there. Top 10 in the S&P and Nasdaq. Right, so you have to put some respect on it. And the point I'm trying to make here is, we're only 5% off highs, all-time highs. So AVGO has been my go-to for bullishness and longs, not only for swing trading, but day trades as well. And if it wasn't for AVGO, some of the trades that I've been taking here and there, losses here and there, small loss here, small loss there, which is normal. AVGO has came through multiple times, tenfold for to help that out. So same thing. Long story short here, if this thing, we have a gap up, middle of range yesterday. Okay, yes, albeit, but again, relative strength. If we're voting here for strength and weakness, AVGO gets my vote for strength. Okay, and again, I'm not talking. I know political. Let's not get political here. This is all business, baby, right? So you can cast your vote soon in November, right? This is not the time and place for it, at least for right now. Okay, so we have moving on. Meta, right? Same thing. Slight gap up. Now Meta literally did make all-time highs yesterday, right? I actually took a loss on Meta, on Friday, on Friday, which was kind of annoying, but because that trade eventually worked out, towards the end of the day, but I got out because of data decay. So just be careful up here. Sometimes trading all-time highs is tricky because, it wants to go higher, but then, people, when it makes another new high, they take profit, right? Because they're at all-time highs, right? So even, longer-term traders are like, oh, wow, cool, Meta's going good. You take some profit here at all-time highs. And so that just naturally kind of provides some heaviness sometimes, especially going into the month of October, right? Going into election year. So people are like, hey, man, I got some good money that I'm making in Meta here. Let me go, let me go take some off and take some profit. And, world's getting kind of a little crazy here and there, right? So, that's just common sense, right? Logical, right? So just be careful with it. It's still a hard one to short because, again, like I said, yesterday we just made another all-time highs. So it's one of those things where it's hard to short, but it's also, picking your spots for longs could also be, for day trade wise, might not be as easy as it sounds. Ugh, I'll get the words out. I talk fast. I get it. Microsoft, in the hand, a little bit more easier to trade. It's been relatively more weaker. I've been going to this bad boy here for weakness, right? So if we're voting here, Microsoft's going to get the bearish bearish vote. So we actually just did crack down below yearly VWAP, this kind of darker gray line right here. Slight gap up, yes, and a weaker gap than most. And if we were to break, yesterday's low, meaning here, and we were to continue, this doesn't mean that we're just going to short it, but we'll see how the intraday tape plays out. But just note, I would have a note down here. I already have one down here for us. 405.72. There's going to be an unfilled gap here. So if you're short, I would recommend to take some profit. If you're short, you have to buy to cover, right? So, buy to cover, buy to exit. So that would be the area location in which I would recommend to do so. Okay. And Microsoft has just been kind of bobbing and weaving up in between. It's just demand and supply. All right. So again, where Microsoft is not, close to all-time highs, something like AVGO and Meta, we're 12% off all-time highs. Okay, now Microsoft's still a good company, don't get me wrong, right? Now, if we come lower, okay, that would be good. You might want to start to pick off some, I'm not sure if we're going to get down here. We might need a catalyst for that, but 375, I have my eye on for quite some time. We already liquidity fishes one time here, 2 times here, so we have to watch out for a third liquidity fish right here below these monthlies. Okay, but for macro swing traders and longer terms, okay, even though Microsoft is weaker right now, relatively speaking, in this sequence of where we are, okay, in the grand scheme of things, it's still good, okay, but just remember, it can go lower before it goes higher, all right? NVIDIA, long story short here, relative strength, the only thing that was up in terms of the bigger stocks yesterday was NVIDIA, right? So we'll see. Now, today, right, we are gapping up, but we are gapping up into this area of supply right here. So just be diligent on that. Okay, just be careful with that. AMD ticker, it's semiconductor as well. And this, I would say, relative stronger, yes, okay, right, relatively more stronger. But I would say this, we don't really have that supply zone as we do in NVIDIA. So we do have an unfilled gap up here in AMD. So it'll be interesting to see if AMD, if it were to hold its relative strength, if it could potentially continue going forward, right? So we've had a couple of really good trades on AMD, all right, and right off the gate, right there, open-wise, it's trying to pop up there. All right, now we just opened, so let me switch over here. Oops. I'm just gonna get a quick thumb on the pulse of this market right now. Just internal wise. Now remember folks, we're gapping up. Yes, we're gapping up in the middle of the range, okay? So just be patient on indexes. All right, would be my humble recommendation, suggestion. just get some advanced declines. All right, and advanced declines, positive 200, very flat. So that adds to the morning patience. Vol D, it's negative, but it's not extreme at all. And too early to get cumulative take care. VIX is just still kind of fading lower a little bit there. All right, let's get some gaps here. Come on, we'll take a swim. Not the time to freeze up a little bit here. All right, so AMD definitely on the list here for bullishness. Now you might want to wait for the first bar to close here. First, maybe 2-minute bar at least minimum, 5-minute bar. Opening day's range is about 15 minutes. All right, so we see Tesla. Come on, take a swim. Come on, baby. I do like how Tesla pulled back on weeklies and is off this 20-period moving average right here on daily time frame. So definitely, Tesla's definitely on the list here. Wide range bar on the on the 2-minute time frame. AVGO, my little go-to here as well. I like how AVGO is pulled back on the 60 and 30-minute time frame. AMD giving back on the 2-minute bar there. Microsoft, out of all of them, has a 2-minute flip here. Interesting on Microsoft. All right, so Tesla, let me just make sure we're good on the intermediate time frame here. Kind of coming into this little area here on the intermediate time frame. But I'm gonna go here, Tesla, right out the gate. Long call. We're in a little bit of a, I would say, supply on the 30 and 60-minute time frame. But on the daily, coming off the 20 here. Just make sure it's still valid. You can always wait for the opening day's range to really pan out. Netflix has a similar setup to Tesla here. But if I were to pick up the, you can see implied vol, these are a little bit more expensive here because of the whole event here. So if I were to pick up, say, the Tesla here, 250, those are going for about, what, 655 here. All right, stop loss, if we were to fill this gap, 240.60, 240.60, what does that look like in terms of risk? Give or take. So you're probably risking about $1.50, give or take, $1.60. All right, if you buy these for $6.35 and you have a stop loss below here, gap fill. All right, you're probably risking about $1.50, $1.60, give or take. All right, kind of don't like that lack of fall through there. So you might want to be a little patient on that one. All right, I'm personally going to pull the trigger on it, however, but just make sure you have a stop loss here, 240.58. Okay. So well, risk about $1.60 if you buy these now for about the 250 strike to go about 630. All right, so just analyze some risk for y'all there. Now sometimes just with this, the way the market is, as I've been mentioning multiple times here, be a little patient. All right, You always want to be patient. But just because of the area location that we're at right now and the condition. All right, so I bought these. I got these for what, 635. Lock that up. All right, long call. All right, stop loss, right? 240.48. Okay. In the event that this doesn't fall through or work out. Fair enough. All right, moving on here. Let's see what else we got here. Did AMD fall through here? No. So you might want to continue to work on these, of course. Trading is a constant. Let's see. Oh, there was a. What's SMCI doing here right now? Okay. Gap and crap. SMCI trapping people there. SMCI has a trap bar. Whoever bought that opening print is in pain right now. SMCI. Put day trading. I want to see if the options are now a little bit more calm after the split. Is the spreads were wide? Okay, they're getting better. Good. So if you were to get SMCI here, long put, there's a little bit of a trap bar right there. All right, there's somebody, think about anybody who really bought the opening print on this gap up, immediate violation. So they're in pain right now, right? They're in pain right now. So, gapped up, we've been in range, inside mother bar, and then we just, right, yesterday was a green bar, and then we gapped up. So there might be some trapping here. And so therefore, if you were to, and I like it too because it's we know exactly where we could be proven wrong if we're wrong on this. So that's what I like most about it, is because if this bar gets taken out, just get out, we're wrong. Okay, so stop loss is going to be up here. Okay, so if I were to pick up, say, maybe the 46 strike put, they're going for what, $2. So stop loss would be 50, call it 50.20. Above that trap bar. I'll add 5 pennies there. I'd be risking about $1.40-ish, almost the whole premium here. All right, so I'll pick these up here. SMCI October 11th day trade, 46 put here. All right, and pick these up for what, $1.90 looks like they gave me. All right, about 10-15 wide spread, not super ideal, but good enough. I've seen worse. All right, so this is actually a long put for a day trade bearish, right? Okay. And a long put is bearish, folks, okay? NVIDIA. Trying to hold strong there on its VWAP. Tesla wrong? Not yet. Looks like it's probably going to be, though. See, AVGO, not giving me much there. All right, so SPYs are kind of clicking down here. It's still a tough one just for the fact of the range. But let me just take a quick peek of internals really quickly. I also am courteous of the time that I only have you folks here, only 5 more minutes here. Nothing too extreme here. Nothing to write home about here, really. Okay. You know, NVIDIA is trying to. NVIDIA is holding some bids here on VWAP so far. Let's see, is it better than AMD? Yeah, it's better than AMD here. All right, so NVIDIA, we can take a shot at this. Now we are trying to, just remember, we are at that supply zone right here. Okay, so you might want to just be a little, diligent on this, be a bit diligent on this. Yeah, Santo, this is like definitely a condition in which wait for levels to come to you for sure. You always want to be doing that, but especially when we are in this condition of like range like this that we've been discussing. Put that thesis on steroids, right? I will say NVIDIA is holding some bids here for a potential long call. We could have a spike breakthrough liquidity-wise on this, okay? But you can't get upset if this doesn't fall through and work out, because I got the monthly, I got the weekly, I got the daily, okay? Well, specifically what I'm looking at right here is this weekly level right here. Now, there could be a potential, people getting stopped out right here with a liquidity sweep higher, okay? People who are short can get what's called, swept out, right? And that could be providing some liquidity rate punch higher. But, I want to be careful, if that doesn't fall through, then, you might be taking a loss on this trade. And so as long as you're okay with that, cool, right? So, and I want to give it some space, right? So at least, if we were to, similar to Tesla, if we were to come down and fill this gap, this would be my stop loss area right here, 127.44 handle. All right. So, never feel nervous, just analyze the risk. Know that you could be right, know that you could be wrong. And if you analyze your risk and you say, okay, if this happens and I'm wrong and I'm okay with that risk, pull the trigger. Okay, so if I put my stop loss we have a setup. All right, it is a setup, as long as it's a setup. Okay, 127.44 would be the stop loss, for example here. Live example. All right. I gotta hurry up at 127.44. And so therefore, if I were to say pick up the, let's just say the 122 strike call for $1.92, right? And if I were to get stopped out, we'd be risking about $100 per contract. All right. All right. So there you have it, right? And right now you have a chance because it's just kind of hanging out on VWAP right now. Okay. So if you buy these, let me see, NVIDIA 132 strike call. NVIDIA. And got them for an exact $2. Easy math there. It'd be about a risk of about $100. Looks like SMCI kind of printing there for us a little bit there. Tesla looks like not so much. All right, now I got like 1 more minute left. I got the timer over here to my right? So let's go to look at some SMCI real quick, and then some Tesla, and yeah, I think we're good here. That's what I got for you so far. All right, so we just discussed the risks and all that on this. Let's just see. All right, so Tesla might be wrong here. All right, got stop loss in place. All right. There's an unfilled gap right there. All right, so I don't like to get out unless it violates the whole thesis in the trade, right? So hasn't yet. Okay, so from 635, they're going for about 510. All right, and SMCI looks like it's trying to fall through a bit there. All right, SMCI. All right, not enough, of course, right? Tesla's down a little bit more than SMCI, but bought them for 190. They are going for 205. So I'm gonna see if I can work on this, to continue to work on this, okay? FGO, and then we just got some bullets exposure. Apple, I'm long put Apple. XOM, having a bad day today. That's a nasty gap. Okay, AVGO starting to give us a little something here too. Odd today. Some stocks up, some stocks down. Hold your cards tight, folks. The weaker ones are up, the stronger ones are slightly down. Interesting today. You can always sit on your hands, folks, to let things develop. Part in being a very good trader is knowing when to do something and when to do nothing. All right, so I got some risk on, but hold your cards tight, folks. Unfortunately, that's my time for now. My phantoms know. Yeah, so if you want to spend more time, I gotta go here, but we go full through, right? So if this is kind of floating your boat, go to TradePhantoms.com. TradePhantoms.com, and this is hit the register button. This is where you can kind of start your journey if it fits, and if not, that's okay too. But October 10th, Thursday, 7 p.m. Eastern Standard Time. 7 p.m. Eastern Standard Time, October 10th, which is what, this Thursday, right? You can put your name, email in there. All right, you'll get sent a link. About a 90-minute class, give or take, about an hour and a half, give or take. How markets work for professional traders, hosted by Mr. Green and Mr. Black there. Okay, and all markets, stocks, futures, forex, options. Okay, multi-direction, up, down, and sideways. We're just starting out, all good. Just starting out with a smaller account. All the way to people that may be looking for how to protect or manage their wealth. Okay, so it's kind of a one-stop shop for all things trading here. Okay, even crypto, right? So that could be a place where you could potentially find out more. Okay, if that floats your boat. And as always, so my phantoms, I'll see some of y'all this evening. Today in class, I think we have futures today, and then of course, God willing, I'll be with y'all tomorrow morning, and we could roll up our sleeves and continue what we do. Fair enough. All right, folks. That said, I gotta go. Blue out. Trade safe, and protect yourself. God bless. Take care. Blue out.